Hi guys, it's LSP. It's currently Sunday the 19th of May, almost 4 o'clock PM GMT time. So it's been a couple of weeks, I guess. I can't remember the last time I posted a video, but I wanted to go through something today because, I've had a lot of emails and questions, and some people have been getting back to me, assuming that I'm just, going on about the same stuff, not really showing anything. And first of all, I don't need to do these videos, obviously. I enjoy them. I enjoy doing these videos. And I've always found over the years from experience that the more you talk about something, and share it with others, then the better you become, in this case as a trader. The more I talk about these things, the more, um, um, the better I become as a trader because I'm constantly evolving and constantly changing, So that's the first thing. The second thing is, there is, how can I say, there's no right way or wrong way to show information, especially when it comes to trading. There's just so many different myriads of ways to trade, or a myriad of different ways to trade. But the end result is whatever works for you individually, right? So when I show something, the whole point really is that trading, it should be very, very simple, okay? But through experience and time and patience and effort and persistence, okay, I've found a way of reading price that is so beyond anything that I've learned previously that it allows me to see what's actually happening with the orders within the months and the weeks and the days and the hourly and the whatever candle I'm looking at in that moment. It allows me to be able to break that down and see the accumulation of longs, the accumulation of shorts, the distribution of of positions, the liquidation of positions, and so on and so on and so on. Okay, it's just something that I've arrived at personally. Okay, and like I said, I'm constantly evolving. So to give you an idea of what I'm talking about, and that this is not just some rehash or some crap that I'm talking about and not really giving you guys any information, not really pushing through on something that makes a lot of sense. I want to show you a little nuance, something that makes sense. Okay, when you're looking at the monthly chart like this, and again, I do apologize if I'm coming across as it's arrogant. That's really not my intention at all. It's just I want to give you guys something that you can look at and say, you know what, that actually makes a lot of sense, right? And then maybe that's something that you can study yourselves and maybe arrive at your own conclusions and then add that to your trading, toolkit. So you look at the monthly chart of the dollar index like this, okay? And just to quickly reiterate, this is the June contract of the dollar index. I use the futures contracts on this platform. It works for me. I'm happy with it. Don't really need to use any of the like this the spot dollar or DXY or whatever. This works for me. So when you're looking at this, I see there's an inefficiency here, okay? And if we just mark the low and we mark the high of this candle, so this is our inefficiency. Now, what's interesting to note about this inefficiency is you see we have a high here, and a high here, okay? And on this month, which was last month, we went through and then back in or below these highs, okay? So why did price do that, and what does it mean going forward based on this month? Yeah. When you're looking at the lower time frames, you see a lot of ebb and flows, the ups, the downs, black candles, green candles, or red and green candles, depending on whatever color scheme you're using personally. But you see a lot of this ebb and flow, ebb and flow, ebb and flow, right? But when you're just looking at a monthly chart, you just see 1 month of data, okay? And the idea for us, if you think about it from a progression point of view, you look at the monthly chart and you say to yourself, okay, where do I think the monthly chart is going? Okay, and because a month starts on the 1st and it finishes on the 30th, or the 31st, depending on what month you're at, or the 28th, in terms of February. But you start on the 1st and you say, well, where do I think price is reaching for? Now, sometimes you have to wait a week, right? It's got to wait a week, let price kind of unfold a little bit. And then as you start to get expansion throughout the remainder of the month, okay, it starts to give you an idea of where price should be reaching for, right? But when you're watching that progression on the monthly chart, if you say, well, I can see price should be reaching for this specific level, and that level is higher, okay, and we're getting some range expansion now on this month. When you drop down to the lower time frames, it doesn't really matter what's happening on the weekly or the daily. What matters is, okay, so what matters is, sorry, I've just got a message that's popped up on my screen. What matters is the monthly pull is going in one direction, okay? And if we're expecting that, doesn't mean that we're right, but I'm just saying if we're expecting that monthly pull, when we drop down to the lower time frames, weekly, daily, and possibly 4 hour, because it's still quite a high time frame. It gives us an idea of where price should be reaching for, and then as price starts to pull away from that level, okay, we're not getting antsy saying, well, price is moving too far away from that level, so now the weekly's taken over and the monthly no longer has any weight. Yeah, that's not the case. You need to look at the higher time frames, and any time frame that's lower than that, you need to stick to your high time frame bias and look for a reason on the lower time frame to confirm that higher time frame bias. Okay, so like I said, when you look at this month here and you see that price went through above this high, above this high, and above this high, okay, we start to get a little bit of retracement. It comes back below these highs. But now look what this month is doing relative to what happened last month. So the context behind everything that you're seeing makes more sense when you look at it in the way that I'm about to show you now. We had a high. So let's say there's a liquidity above here. We had a high here, liquidity above here, and we've got a high here, liquidity above here. Last month opens, does all its, whatever it's going to do, pops up, goes above all of these highs, scoops up all the liquidity and fills in some of the inefficiency here, and then comes back below these highs. Okay, great. But now look at this month. If price opened and then started to grind lower and start to come towards last month's low, it would make sense that we would probably tag last month's low, maybe just drive a little bit lower and take this month that. But the point is, we wouldn't be thinking price is going to continue going higher to maybe fill in this inefficiency, right? We'd be thinking price is probably going to go lower to take the monthly low, and then we assess again once the next month kicks in, and then we start the whole process again. But that's simply not the case. Right now it's currently the 19th of May, which means we've got about a week and a half left of this month, in terms of trading time. Okay, great. So what do we do with that information? Well, when we look at the monthly candle of this month, we can see we opened, we went lower, up, and now we're starting to grind higher, some nice expansion upwards. Okay, so we're very close to this high up here, this candle. We're very close to this high. We've already gone above. So think about the context and what's actually happened. It would make logical sense that if price was just going up there to scoop up all of the liquidity above these highs and fill in some of this inefficiency over here, right, and then come back into the range, that it would continue going lower if that's all it needed to do. If all price needed to do, whoever, or for whatever reason price is going up there, okay, I'm not going to get into that, but for whatever reason price is going up there, whatever reason, everybody has their own personal reasons why they believe price is going up there. If it was just going up there to take the liquidity, okay, above all of those highs and to fill in some of this inefficiency, okay, it would be enough, right? If that was the case and that's all that they were doing, right, we would see something different. We wouldn't be seeing this month's candle the way it's forming now. We would see lower prices, and then we would assess and look at it and say, oh, well, it cleared out all the liquidity up there, it filled in some of this inefficiency, so it's fulfilled an objective, whatever that that objective was, and now it's starting to grind lower. So we would assess it that way, but we're not. We're looking at it and we're saying, well, they've already done that, and it's still going higher, which means maybe there's something above us that price needs to be reaching for still. Do you understand? That's very, very powerful information. And I'm not the only person that sees this stuff. There's many, many ways of looking at this stuff. And there's many, many traders out there that look at price in their own personal way. And I know traders that have arrived at a bullish bias on the dollar through many different ways. My friend, I was talking to him a couple of days ago. He was telling me that fundamentally the dollar should be going higher. Okay, I know there's some people that have told me that the dollar's going to crash. I don't really pay much attention to stuff like that, but he has logical reasons that make sense why the dollar should be going higher. It's way over my head personally. I don't understand any of this fundamental stuff. I'm a bit thick like that, but it makes perfect sense. So there's a lot of ways to arrive at this, to arrive at a bullish bias on dollar, right now. But for me, I look at what's actually happening in the candles, and I try to think like a market maker. I try to think like a liquidity provider. I like to think like a broker. I try to think like a retail trader. I try to put all of this together and just trying to get an idea of where price effectively should be reaching for from a manipulation point of view, from a logical point of view, from a trap point of view, from just a normal ebb and flow point of view, from a range point of view in terms of the monthly ranges, weekly ranges, daily ranges, and so on and so on and so on. It gives me a better indication as to where price effectively should be reaching for. And then I take that information and I transpose it over to a pair that makes sense, euro, cable, that sort of thing. So like I said, when you're looking at this now, Price went up there, they fulfilled an objective, it's come back down, but then it's continuing to go higher. So it would make sense now that the remainder of this month should be bullish. They should continue to go higher. Okay, so 98.06 roughly is the first area that I would expect price to go to, and then top end 98.50 to 98.55 is another area where again I should expect, that I'm expecting price to at least be reaching for, okay, because it would make sense based on what I'm seeing on the chart. So when we drop down to the lower time frame weekly, you start to get a feel for, what's actually happening, based on that monthly. We've got that monthly pull now. So you look at the monthly and you say, okay, I believe the monthly is going higher. Again, don't take this, just take it with a grain of salt. It's just my own personal analysis. I'm not saying it will or it won't. It's just what I'm seeing on the charts, and I believe that it's going higher. So when you look at the weekly chart now, we've got this in the back of our mind. Okay, we've done the analysis on the monthly chart. We believe it's going higher for all the reasons that I've just explained. So when I look at the weekly, is that confirming that bias? Is that confirming that monthly pull? And is the remainder of the month going to continue going higher based on what I'm seeing on the weekly chart? Well, let's take a look, right? You look at the weekly chart and you say, okay, price came down here. I'm going to start in this section here. Price came, we had this high here. This is the second high that was created. So you see there's a couple of highs here. Then we had another week up here as well. So we can see that there's a lot of liquidity building above this. Came down. So it looks like accumulation, another round of accumulation. It's grinding higher. We had a nice little pop here above. That was the wick that was left behind. A little bit of relief, okay, and then a really strong week last week, okay. So it is confirming my higher time frame bias. So I'm happy with that. I can look at that and say, okay, look, it makes sense. It makes sense that price is going to continue going higher because it's simply not going lower, right? We can see it clearer on the weekly chart because we can break it down, and you can look at the down weeks, and you can say, well, from here to here, it's a pretty decent move in terms of, progressive weeks. So down, 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 but it's grinding higher. We had a nice sharp drop here. This is a very important candle. I've said this many times in many of the videos that I've done. That's the giveaway for me. And grind higher. Nice pop through it. Small sort of relatively weak pullback, and then a really nice strong week again. So it makes sense that price is going to continue going higher. So when we drop down to the daily, we can zoom out one more, and again we can see the refinement of all of these areas and these levels. We don't really need that. The refinement of all of these areas and these levels, and there's a very interesting level right there. This small stop run right here. Think about what's actually happening on the charts, right? Price is simply filling in inefficiencies. So we had an inefficiency down here. Remember, higher time frame pull on price, still pulling, price is still going higher. There's a high time frame draw, still pulling up. Okay, we know there's plenty of liquidity above us, and everything that I'm talking about right now is about the future. It's not about now. I'm just arriving at that confirmation of that bias I have on the monthly by breaking down everything that's happening on the weekly and the daily. Is it confirming that that is indeed the case? And again, nice sharp drop, scoops up the liquidity here, grinds higher. Shallow pullback, nice pop, takes out all the liquidity, should be enough, right? But comes down, back up, down, takes out the liquidity below here, fills in the small inefficiency here, nice pop, and then starts to grind higher. Okay, so for me personally, that wick or tail right there on the monthly, which is what that is, wasn't what they were going up there for. Yeah, that was just simply a little bit of profit taking, but they're going to continue going higher because the dollar is still bullish. Then we can use that information, and we can break it down, say, on a 4 hour and really start to kind of get a better feel for where can we get in, what can we expect. So when I look at the 4 hour like this, I say to myself, okay, look, ideally, what do I want to see in terms of the dollar? What do I want to see in terms of the dollar for a timing, to time my entry on euro, to time my entry on cable, to time my entry on one of the other majors, for example, yeah? What do I need to see? Okay, I need to see price come lower first. Okay, I really am not interested if the dollar sort of opens up today, okay, and then just rips to the upside, fills in the inefficiency, then everything changes for me. Then I'm looking potentially to fade a move, as opposed to going long, or in this case, short on a foreign currency. So what do I need to see? I need to see price come lower first, okay? So when the week starts, what I'd like to see price come lower and maybe do what we saw on the daily. A little stop run, filling in efficiency, basically give us an indication that price is just what was just going lower to either take out traders, scoop up some liquidity, raid stops, but then reverse and continue going higher. So I'm looking for that rejection. I'm looking for that reversal in an area that makes the most sense. In this case, down here. Okay, so if price does come down, takes out the liquidity below these lows, fills in a little bit of the inefficiency, starts to maybe pop a little bit deeper, then we get a nice little reversal, starts to grind higher. That's all perfect, because then I can look at the euro, I can look at the cable, I can look at lots of different other pairs that are the majors dollar based, and then I can see which one of those makes the most sense. Now, in my main account trading, I only trade euro and cable. Okay, so for me, it's going to be euro. This week, I'm looking at euro and cable. Cable's had a really nice run, so that's going to be a bit tricky for me personally. But there's plenty of room left on the euro. On the weekly chart, all the way down to 110. So there's plenty of movement. But like I said, I want to see a pullback on on the dollar first before I do anything else. So just some ideas, guys. I know a little bit longer than normal on the video, but just some ideas, some things that I want to talk about, I wanted to discuss, little nuances, and as always, I hope it helps. I hope people watch this and glean some information from something that they can use in their own personal trading. And I'll leave it at that. All right, guys. So take care. If I see anything of interest, I will send it over on Twitter. I'll post some charts and whatnot. And that's it. All right, guys. So I will speak to you in the next video. Take care.